It was a volatile year, a much more volatile year in 2015 than 14, 13, or 12. It was also the first year that we had a 10% plus correction since 2011. So I think we'll look back on that, the really emergence of what is termed the FANG stocks, Facebook, Amazon, Netflix, and Google, as higher flyers than they once were.
Stocks were down modestly during the course of 2015 with a couple of spurts higher, a lot of volatility. Bonds were basically flat to slightly lower, so it's not going to be a joyous year, nor is it going to be a year where the Grinch stole Christmas. Basically it's going to be a year where a lot of people treaded water, and I think that's what they'll see when they get their end of the year statement.
It is a reality check. I think investors have to realize, and some do, but the majority don't, is that the market works in fits and starts. If it was up 8 or 9% every single year, there'd be nothing to it, there'd be no risk, and therefore no reward. So the 8 or 9% wouldn't be there. So a flat to maybe up a little bit this year on the equity side for us, thankfully. A flat to down a little bit on the bond side for us also, believe it or not, thankfully.
Yeah, maybe you didn't make any money in the stock market, but it's 2015 that's going to set up years like 2011 and 2012 and 2013. So you got to wade through these years in order to get to those really good years. In 2016, who knows, that could be the really good year.
Political rhetoric as it impacted some of our biotechnology stocks, which really have great earnings potential, solid pipelines if you look at Biogen, Gilead, and Celgene. But Hillary Clinton really firing the first shot over the bow of drug price regulation, and that weighed on them a little more than I would have expected. I think Apple moving sideways was another issue. The constant concern over iPhone sales when they've kind of went a long way to creating a much broader ecosystem, I think is overlooked. But I do believe that the abundance really of investors investing their own money just due to the availability of it through discount brokers is really an opportunity for us, because the average retail investor underperforms, and I don't think it's going to be any different with the average retail investor now underperforming online. So I think times like this, volatility like we've experienced, really creates opportunity for us over the next 1, 3, and 5 years.